Have you ever stopped to think about what it really takes to run a business on a global scale? I mean, today, a company can launch from a single laptop and literally go worldwide overnight. But as you can imagine, this incredible opportunity brings with it a whole new universe of pretty complex challenges. All right, so here's our game plan. We're going to start by figuring out what a modern global business even is, and then we'll map out the financial world it operates in. We'll get into why companies expand internationally, follow their journey, tackle the unique risks they run into, and finally, we'll take a little peek into the future of all this. So first things first, welcome to Global Business. To really get a grip on the opportunities and the challenges, we have to define our main character here. What in the world is a multinational enterprise, or MNE, anyway? Okay, so at its very core, an MNE is just any company that operates in more than one country. It could be through a branch office, a subsidiary, or maybe a partnership. But what's really amazing is that the barrier to becoming one is lower today than it has ever been in history.
And when I say low, I mean really low. Technology has completely flipped the script. A digital company can launch a product and boom, it has customers all over the globe almost instantly. This has totally changed the entire landscape of business and competition as we know it.
Now, for any business venturing abroad, it's not just about finding new customers. It's about learning to navigate a completely new environment. So let's go ahead and map out that playing field, the global financial marketplace. Yeah, I know. Looking at this for the first time, it seems incredibly complicated, right? It's this huge, tangled web of banks, governments, and financial products, all moving massive amounts of capital around the planet. But don't worry, we're going to make it make sense. We can actually boil all that complexity down into just three basic parts. So first, you've got the assets that are being traded, things like government bonds. Then you've got the institutions that are doing the trading, the banks. And finally, and this is the important part, you have the linkages. These are the networks that use currency as the vehicle to connect everything together. Okay, so we know what a global company is, and we know the market it plays in. But why even bother? What really pushes a business to leave the comfort of its home turf and take that leap? Well, it really comes down to two big ideas. The classic theory you might have heard of is comparative advantage, the idea that countries should just focus on what they do best and then trade with each other. But the modern reality, it's all about exploiting market imperfections. MNEs are masters at finding and using the differences between countries to get a competitive edge. So think about designing a product in the US, manufacturing it where labor is cheaper, and then selling it in Europe where demand is through the roof. That's a market imperfection at work. And this strategy leads to all kinds of different motivations. You might have a company that's a market seeker, just chasing new customers. Or maybe it's a raw material seeker, hunting for resources. They could also be looking for more efficient production, brand new ideas, or even political safety if things at home are a little shaky.
So how does this actually look in the real world? Let's make this tangible. We're going to follow the journey of a fictional company. Let's call it the Ganado Corporation, as it grows from a simple local business into a full-blown global powerhouse.
The journey nearly always starts small. So here in Phase 1, Ganado is 100% domestic. But then, in Phase 2, it takes its very first international step. It starts working with a supplier in Mexico and a buyer in Canada. All of a sudden, it's dealing with different currencies, different credit laws. The entire game has changed. Now, as Ganado grows, it faces a kind of ladder of choices, and each one requires a bigger investment and a deeper commitment. It can go from simple exporting to licensing its manufacturing to someone else, to entering a joint venture, or even building its own factory on foreign soil. And each step up that ladder gives it a bigger presence, but it also comes with much bigger risks. And this slide right here perfectly illustrates the new financial reality. Ganado now has sales coming in as euros and Chinese renminbi. Now, to figure out its total performance, all of that foreign money has to be converted back into US dollars. And because exchange rates are constantly moving, its profits can literally change overnight, even if its sales don't move an inch.
Okay, this brings us to a really critical point. While this whole global journey is packed with opportunity, it also opens the door to a completely new set of rules and, maybe more importantly, a whole new category of risks.
This quote from the Financial Times really gets to the heart of the matter. The very same interconnectedness that creates all this opportunity also creates brand new vulnerabilities. A problem in one corner of the world can now ricochet through the entire global financial system with unbelievable speed.
So the most important thing to take away from this is that managing international finance is a completely different animal.
At home, you know the culture, you know the rules, you know the politics. But internationally, you're juggling unique cultures, unfamiliar regulations, and the constant threats of currency swings and political instability. So let's boil all this down to the three biggest financial challenges that every single M&E has to deal with.
First up, you've got foreign exchange risk. The profit you make in euros might be worth a whole lot less by the time you convert it back to dollars. Second is political risk. A new government could come in and decide to seize your assets, or just change the tax laws on a whim. And finally, you've got the complex maze of different governance rules, regulations, and business practices in every single country you operate in.
And all of this brings us to our final section, where we have to ask a pretty tough question. What are the limits of globalization? Just how open and integrated can our world actually become? What's really fascinating here is a concept called the twin agency problems. This slide does a great job of showing a fundamental tension that can actually slow down or even stop our global financial system from becoming more integrated. So here's the problem. It happens when powerful people, whether they're corporate execs or government rulers, put their own personal gain ahead of what's best for their company or their country. Think of a CEO who makes a deal that benefits his own side business but actually hurts the multinational he's supposed to be running. Or a government official who blocks foreign investment to protect a local company owned by his family. That's the core issue. When self-interest gets in the way, it creates distrust and it stops money from flowing where it needs to go. And that leaves us with a massive question for the future. In a world that is this financially connected, the actions of a few can have a huge impact on millions. So, how do we build a system that aligns the interests of these powerful insiders with the goal of an open, prosperous global market for everybody? That right there is the challenge we are all facing today.